Hi, this is Steve Aiken with Aiken Mortgage. I wanted to talk to you today about a way to build an investment real estate portfolio. You do this even though if you don't have the income by using the rent to qualify you for the mortgage. It's what we call a DSCR loan, debt service coverage ratio, and it's used to buy investment homes only. So let's take a look at the factors that go into this. We look at the appraiser's rent, what he says it's going to rent for, what the monthly mortgage payment is, whether or not you're an experienced an investor or not. We look at your credit score, we look at your assets. So the qualifying factors, we compare what the appraiser says it'll rent for versus what the mortgage payment is. This includes taxes and insurance. If what the appraiser says it will rent for is at least 75% of what the mortgage payment is, typically we can get the loan done. Most often we like a 1% because it gives you a better rate, but we can go down to 75%. You're just going to have to pay another 1% of the loan amount at closing than you normally would, and the rate's going to be a little higher. We can go as low as 15% down payment, but again, the rate's going to be a whole lot higher. You have to be an experienced investor and you have to have a stellar credit score. So we can go as low as 620, but again, you're going to get hammered on the rate and you're going to pay more points. Typically, we look for 700 or more. So what I see is close to a 1% coverage ratio, 25% down, 700 or better in credit score. And then you also have to have reserves left over after closing. Don't have to use them, but you have to have them. And it helps to be an experienced investor, i.e., this is not your first rental home. But if it is your first rental home and you're just starting, we can get the deal done. So let's take a look at an example. Here we have, I'm going to put my little pin out here, $400,000 purchase price. And then with 25% down, 100,000, that leaves you with a $300,000 mortgage. Your monthly payment's going to be $2,900, including taxes and insurance. Your cash to close, which includes, in this example, a 7.5% interest rate, paying 1 point, all the other closing costs for title fees, etc., and appraisal, it's about 116,000. You also have to pay your first year's insurance on the property at closing. So 116, and then we look at exactly what the appraiser says it'll rent for. As long as it comes in at 2175, which is 75% of the PITI, we can get you the loan. Again, rate's going to be higher, you might pay an extra point, but still, we get you into the property. And the benefits of owning real estate far outweigh the slightly added closing costs or expenses or slightly elevated interest rate just to get you in the deal. The appreciation takes care of everything. Now, the reserves you have to have left over, how we calculate that is you have, let's say your primary residence cost you $4,000 a month. That's your monthly mortgage payment, including taxes and insurance. Then we take that, we add the monthly mortgage payment on the property you're buying and any other mortgage payments that you like on other rental houses. And we add those all together, multiplying by 6, and that's what we get. So in this case, we just take this plus the 4K for your primary. That gives you about another 40,000. So 160,000 is what you need to get into a home. We're only going to use about 116 of it, but you have to have that. And that's how it works. Pretty easy. So let's go back and review real quick. I'm going to erase all this stuff. Clear all drawings. There we go. Summary here, we don't verify on income or run ratios, so we don't need your W-2s, pay stubs. You need cash, and it helps to be an experienced investor, so you do have to have a good down payment. Good credit helps. Rent must be enough to cover 75%, preferably 100% of the monthly mortgage payment. And it's great for creating residential real estate investment portfolio. And then no complicated qualifying process, and it's fast and easy. That pretty much does it. I hope that if you want to give me a call, let me take you right to here. This is my name, Stephen Aiken. I'm with Aiken Mortgage, my mortgage company. That's my phone number. You can email me at stephen@aikenmortgage.com, or you can go to my website. I look forward to hearing from you. Thanks. Bye-bye.